Yo traders, what is going on? It is JB from FFT Trading, about to give you another masterclass in conquering the financial markets. And today we are going to speak about probabilities in trading. So I'm going to basically teach you guys how you can think in probabilities and how you can essentially base all of your decisions so that every decision you make is in line with a high probability of something in your favor happening. Now that might sound like a bit of a mouthful, but essentially what this whole video is going to teach you is when you go ahead and formulate your trading plan or formulate your decision making in trading, or even just finding high probability setups, if you're struggling to kind of get to grips with that, or maybe you're being a little bit too rule based, then I'm going to tell you how you can pretty much look at trading in such an easier way in which every decision is backed by a high probability of something working out in your favor. So we're going to just talk about some stuff. We've got a nice bit of lo-fi playing in the background. We've got this trade that I've taken by here. And we're going to just sit back, watch, chill, and have a very nice discussion. So sit back, get your pen and paper out. We're going to go ahead and take some notes. Okay? So think about it like this, guys. We're traders and we're looking to make money in the markets. Okay? So we know that trading is a probabilities game, but we might not be acting in a way which is in line with the probabilities that is occurring in the market. And what I mean by this is that a lot of us are very rule-based traders. I definitely was for a long time, until I shifted to thinking probabilities. My trading remained really stagnant, but what really helped me make that shift was really understanding where the probabilities in trading lied. So I'm going to just speak about a bunch of these and let's go ahead and just go into it, right? So looking at trends, okay, if we're looking at a trend, right, when we have a clear trend, price is much more likely to follow that direction. Okay, that's very obvious. Price is more likely to follow in the direction of a trend. So if you're looking to make some decisions in the day, you can go ahead and look at the trends and just think to yourself, okay, what's the probabilities of me taking buys right now working out? Okay, well, I'm in an uptrend, so it's looking pretty good. Okay, that's the first thing. The second thing is looking at key levels. Price is more likely to move from a key level. Now, how do we define a key level? Well, a key level is an area where price has failed to push multiple times, or simply a swing high or a swing low. Okay, so we see key levels all the time in trading, and we can identify that by lots of wick rejections, or a price has literally failed to break past a certain point after a number of attempts, or simply swing highs and swing lows. And if we're thinking where could price move, then if we place our trades at these key levels, then we have a much higher likelihood of it happening. Now, does it always work out in our favor? Absolutely not. Are we always going to take buys at support and it's always going to work out for us? It's definitely not. But most of the time, if you're following this process, then you're going to be positioning yourself a lot better, right? So if we look at this example by here, okay, if you are, I don't know, let's say price up by there, for example, you don't really want to be taking trades by there. Why? Because it's more likely that price will push off if it gets to about here, okay, or if it gets to key levels by there. So that's something that you can think of, okay? When price has pushed, okay, let's call it push phase, okay? When price has already pushed for a significant amount of time, okay, it's much more likely to retrace, okay? So when price if you're seeing price like this, right, and it's doing whatever, okay, if you catch price in this point right by here, okay, and you don't see no pullbacks, it's much more likely now that price is going to retrace. I'm telling you, sometimes you get those days where price will just push and push and push, but that's very rarely will happen on the lower time frames. On the higher time frames, you might get that, but if you've seen price has just pushed a decent amount, then just think to yourself, well, it's actually much more likely if I buy by here, it could work out for me, but that's actually in the that's in the minority of cases. Okay, it's much more likely that price will retrace. Okay, so in push phases, when price is pushed, it's much more likely that price will retrace rather than keep on going. Okay, so now we can look at retracements. Okay, price is more likely to move from key levels and also retracements. So I'm going to just put retracements by here. okay? So when we have trends, okay, it's much more likely that price will retrace after it's pushed for a decent amount, okay? And now at this point, if you're seeing price has retraced, then you can simply look for price to give you an indication that it's going to form a higher low or a lower high, or maybe it wants to retrace back to these key levels. I can't say that it's more likely that price will always retrace to these key levels by here, but in push phases, price is more likely to retrace, and if we have a trend, it's much more likely that it's going to form our trend structure, and therefore we can take our trades by there. Okay, it's much more likely that price will move in our direction when a breakout happens. Okay, if we see a breakout, this is showing you high probability that our price is going to move in this direction, right? If we have multiple wick projections, okay, this is another sort of probability idea. I can't get my words out today, guys, honestly. Okay, wick projections. Let's put multiple wick projections. Okay. Sorry, guys. So if we have multiple wick projections, okay, it's much more likely that price will follow in that direction. So I know price is pushing by here, but if we were to see loads of wick projections right by there, then it's much more likely that price will actually push down. Okay, now we can see prices pushing up, and again, guys, it's just following the simple I don't know what to call it, simple processes that we've got here, just thinking in probabilities. Right, then the next point I want to talk about is, okay, higher time frames. Right, price is more likely to play by the rules on a higher time frame. So what do I mean by this? Well, if we look at trends, we look at key levels, we look at push phases and retracements and breakouts, and we put all these things together, on the higher time frames, these are actually much more likely to occur. Now that might sound a bit weird, but actually no, it doesn't sound a bit weird, because when we're on the lower time frames, okay, we can put these all into perspective. We can look at trends, key levels, retracements, blah blah, looking at breakouts, multiple wick projections. But what we might often find is that on the 5 minute, we'll be trending like this, okay, and it'll go boom. Hang on a minute. Oh, we're going right back up. Okay, we got a breakout. It's coming right back down by here, and then eventually it's going back up here, going back up there, right? And on like the 1 hour, that could just be like a few candles pushing up, or maybe just trends just forming. Okay, so on the lower time frames, it's likely that price will disrespect your key levels and then just fly off in your direction. I mean, look at this, okay? This is a perfect example, okay? This is why I don't just trade the 5 minute, okay? Because look, we had a breakout right by there, okay? But I could see from the 15 minute, if I just go ahead and just show you some analysis, what can we see? Okay, boom, right, we got this, right, the 15 minute had actually closed inside. We go ahead and take a trade and just let it play out. So you can see that on the 5 minute, this was a breakout, but on the 15 minute, we actually had, price respecting structure. So this is showing you, right, on the higher time frames, that it's much more likely that, structure will be respected, breakouts will be more valid, your wick rejections will be more valid. So on the lower time frames, this isn't so much, okay? But it does happen on the lower time frames. But you just gotta, one trick that I can show you guys is that if you're trading the lower time frames, if you're finding that you're getting stopped out a lot, or price is reversing and you want to enter the reversal, and then it goes back in your direction, and you take that trade, and then it's in your direction now it goes back down to the other direction, and then you can see that the trend is shifted in the opposite direction. You take that trade, and then it just spunks back against you. Okay. The reason why that's probably happening is because price is reacting to a higher time frame. So if you're trading, say, the 1 minute or the 5 minute, the 1 minute by itself is a very dangerous game. Okay, maybe I'll put a video on how to read the 1 minute and stuff, because I'm very good on the 1 minute. But if you're looking at the lower time frames and price has broken a key level, or you can see that price has shifted, just go up one key level. Sorry, just go up one time frame. It broke out on the 5 minute, just check the 15 minute. Okay, if it broke out on the 15 minute, just maybe look at the 1 hour. Okay, maybe wait for the 1 hour to actually close below. If the 1 hour closes below, look at the 4 hour. So you can see, right, obviously if we follow that pattern, we're never going to get no breakouts or no trades. So you just have to keep it like kind of consistent. You just have to be a little bit sort of smart with it. Like, obviously I take the trade by here. I'm not going to go ahead and wait for the 4 hour to close, because I need to make sure that the 50 minute close, and after the 50 minute closes, I've got to make sure that the 1 hour closes. At that point, you probably missed the boat. So you got to get in early, and you got to anticipate. So what else could we talk about? okay, let me just talk about lower time frames, okay? Price is more likely to disrespect levels, okay, or be a bit finicky on the lower time frames, okay? So let's just have a little recap. So in trends, price is more likely to follow this direction. If we're in an uptrend, it's more likely that price will rise than fall, okay? So we can start to think about what direction we want to take our trades, okay? At key levels, price is more likely to go in our direction at key levels, okay? So instead of taking trades at these rando places like, you know, right in the middle by here, look to take trades at key levels, okay? Because it's much more likely that it'll react there. You're going to get days where you're going to miss out on stuff, but trust me, if you follow these good processes, you'll be okay. Okay, in push phases, price is more likely to retrace, right? When price is in a push phase, when price is trending and it's pushed, it's much more likely to retrace. So I guess we can talk about, you know, where we want to enter our trades. So this is just to build up a good thought process for you guys. So as the trading day commences, think in these probabilities. Where is it more likely to move? Okay, I can see a breakout. Now price is more likely to move in this direction. I can see multiple wick projections. Now price is more likely to move in this direction. I can see, on the higher time frames, everything that we've spoken about holds more weight. It's actually more reliable. Okay. On the lower time frames, whilst we can get in a little bit early, we have to also take note that sometimes we can get, stuffed a little bit. What else do I want to talk about? I think, guys, for that, I think that's pretty okay. If you go and follow this good thought process, I promise you guys, you will really, really do well in your decision making. Okay, so piece it all together, go and study the markets, go and see what I've told you is true, and I can guarantee that you'll find that it's true. And my trade's about to hit TP. I'm thinking to myself, I could just go ahead and close it now. Why do I want to wait for? Well, it's going to go ahead and smash up there in any second. Do you know what? Let's just close out our trade. There we go. We've got a nice profit, and we're done. Amazing. Trade closed. Everything's all cushy. Lovely jubbly, guys. I'll see you in the next one. Take care.